Hey there, everyone. Dave Keller here with Market Misbehavior. This is a brief market update in lieu of our regular Chart This episode here for Wednesday, October 10th. It's the first trading day of the fourth quarter of 2025. The end of the third quarter finished quite in a position of strength, with the S&P ending September 30th, accelerating to the upside. Today, we're going to talk about the market conditions after a weaker open. Sort of continued the strength that we observed on Tuesday's session. Wednesday finished near the highs of the day, closing above 67.10 for the first time. In this brief market update, we'll talk about the major averages pushing higher, how volatility remains fairly low, how a defensive sector continues to bubble up to the top of the leaderboard with a lot of names popping to the upside, and we'll highlight a couple of those, and a Magnificent Seven stock making a new swing low. Is that the first of many? We'll look at a couple of those charts here together. We'll start off looking at the major averages here. We can see the S&P finishing up about 1/3% to 67.11 and change. The Dow was actually negative out of the open, ended up sort of chopping around more sideways than the other averages. Did finish slightly higher, but it had a weaker last hour of trading, as did the Nasdaq. The Nasdaq was up the most, up about 0.4%. Mid caps, small caps, both to the upside, all similar to the S&P, so there was no real kind of large over small kind of theme, which has been pretty common here off the April lows. Today, a little more homogeneous, a little more even, with the different cap tiers performing in a similar fashion. Volatility remains very low, with the VIX just over 16. And so volatility in the mid-teens, as measured by the VIX, basically means low fear, low uncertainty. Markets telling you, at least the options market telling you, no real danger of a significant corrective move at this particular time. As always, as we've reminded us, this is a great time to not be complacent as we make new all-time highs on lower volatility, because at some point, one of these new all-time highs ends up being the last new all-time high for a little while. And one of the ways you can validate that soon afterwards is the fact that the volatility would start to spike. We're not seeing that yet, but we'll certainly keep monitoring that. Keep watching the show, and we'll keep you updated if we see any change in those volatility conditions. Bonds were slightly higher today, with the TLT up about 1/4%. The dollar was flat. The curve generally moved lower when we're looking at 5, 10, and 30-year points, all drifting lower. The 10-year point finished today around 4.1%. 5-year yield just below 3.7%. Looking at the commodity space, commodities generally kind of mixed here. Crude oil and crude oil related things were down. Nat gas was up pretty significantly, with the UNG up over 4%. Gold and silver continuing to press to the upside after the incredible runs they've had here in 2025, really accelerating in August and September, continuing to mint new highs and push to the upside. Silver the best, with the SLV up about 1.33%. A lot of life being breathed back into the cryptocurrency space, with Bitcoin currently trading just over 118,000. Ether prices above 43.30. You can see all 10 of the top coins tracked on the stock charts platform firmly in the green today, even more constructive in terms of the day's action relative to the equity indexes. Healthcare, I mentioned in the introduction, a defensive sector at the top of the list. Healthcare up and up big. The XLV was up over 3%, far outpacing the other the rest of the 11 S&P sectors. Number 2 and number 3 were technology and utilities, both up about 1%. You had consumer discretionary up about 0.6%, and then everything else was kind of flat to down. So while this was a good day for the equity averages, while the major averages did make new highs, about half the S&P sectors were down today. And you can see communication services the worst, down 1.4%, followed by materials and financials continuing to be a frustrating sector of stocks that had looked so promising, and days like today looking a little less so. Kind of neutral breadth more than anything, and you can see depending on which index you're looking at, it was either kind of good or kind of bad, but all sort of bucketed in that neutral amber color. The New York Composite Index, which is the broadest list that we follow, advancers up 54.5%, decliners 43%, so 54 to 43%. But if you look at the S&P 500, almost the exact opposite, 56% decliners, 43% advancers. So what that means is basically the largest names, the components of the S&P 500, more going down than going up today. But in the broader market context, plenty of things were actually doing okay. And I would say that's part of that sort of a sector theme as well, right? With technology doing well, but a lot of the bigger sectors kind of flat to down today. All right, looking at the Magnificent Seven and Friends kind of mega cap growth names, you can see Tesla continuing to do quite well, pushing higher through September, now into October, up another 3.3% today. Broadcom, which we highlighted as a vulnerable chart, really testing the lower end of the range, bouncing higher, just over 1% today. On the downside, two charts to watch for sure. Meta, which is breaking down, kind of continuing after breaking down yesterday, down another 2.3%, about the same decline today in percentage terms for Netflix. These types of charts, as we've talked about, I think one of the dangers to this market and one of the challenges will be the largest growth names not participating anymore. And while that doesn't mean areas like healthcare or energy or even industrials could do quite well, those aren't big weights in our benchmarks. Things like Meta and Broadcom and Alphabet and Amazon and Microsoft, these are huge mega cap names that have a significant impact on the S&P. So when Meta and Netflix are both down over 2%, that's going to register in some small or large way on the index itself. All right, let's look at the market carpet here, transitioning on. And as you know, if you watch our show, we usually live stream the show. We're able to take questions. We have to do it remotely this week as I'm on the road, unable to do a live broadcast. But I appreciate you tuning in for the market recap here today. Should be back on Monday of next week with a more of a regular vibe to the show. Looking at the heat map here, again, I mean, if you cover up sort of the middle of the heat map, which is like Tesla, and then a bunch of healthcare names looking really, really good. We'll come back to those. I'm struck by kind of a lot of neutral red color happening across the board. For example, in communication services, Alphabet up about 0.8, 0.7%, depending on which class of shares you're following. But after that, everything else, at least the next four of the top five names, all down pretty big, 2.5%. That's Meta, Netflix, T-Mobile. And so, a lot of the big growthy names not doing particularly well, especially in communication services and elsewhere as well. Names like Omnicom, which have actually made new 3-month highs yesterday, actually pulling back quite a bit today, down to 5% after yesterday's breakout. So almost sort of like a false breakout feel to some of those charts. Within technology, again, the biggest names just weren't up so much, but you can see things like Micron making new highs, up almost 9%. KLAC over $1,100 a share today. LRCX over 140, Applied Materials. These are all semiconductor names just accelerating to the upside. So that semiconductor AI high growth trade definitely not dead today, even though there were areas of the market struggling, not in the semiconductor space. The SMH, the SOX, those semiconductor ETFs continue to look quite strong, especially on a relative basis. The financial sector, frustrating, right? Wells Fargo made a new 52-week high in September. Today starting to pull back a little bit. Charles Schwab, which had been threatening to get above resistance around 97, 98, now pulling back after its latest attempt at the end of last month to break out. Citigroup back below $100 a share. So the financial sector, which has been a compelling area with charts like Citigroup really showing quite a bit of strength, actually pulling back here. And the big round numbers like $100 a share certainly matter. That's one thing that I've learned over time. How about Nike popping up? They actually reported earnings yesterday. And, the question was, does Nike hold the 200-day moving average? You can see the answer for now was absolutely. Gapped higher today. You'd probably call today a hanging man candle, which is when you kind of have a bounce higher. You have the open and close near the highs of the day, long lower shadow. That happened right at the 50-day moving average. The fact that we gapped higher is good. I would love to see follow through above the 50-day, which would take us above today's high and sort of continue this uptrend. 80 would be sort of an initial upside target with the July and August highs right about there. But again, good reaction to earnings coming yesterday. All right, let's finish off. Look briefly at some charts, and we'll call it an evening here with an adjusted edition of Chart This with Dave Keller. Here's the daily chart of the S&P 500. No real change to what we've been talking about, sort of a broken record style analysis here. In an uptrend, the market makes higher highs and higher lows. As long as we keep making higher lows on pullbacks, the uptrend is in good shape. That's certainly what it looks like here. We're above upward sloping moving averages. That's good too. The RSI is strong but not overbought, which suggests quite a bit of strength here. We're above all the levels that I would be concerned about. So, what I think about in this sort of environment is you assume the market is innocent until proven guilty. And so you kind of assume that this uptrend is going to continue, but you're aware, you're not complacent. You recognize at some point that the uptrend is going to be over. So what would you see on the chart that would suggest that the uptrend phase is no longer going up? For me, that swing low around 65.50, the 50-day moving average is getting pretty close to that level as well. That's kind of the area where I think a pullback to anywhere in there would probably be just fine, but a break below that 65.50 level, break below the 50-day, those would be the lines in the sand that I think could make this market look pretty ugly pretty quickly. But again, no signs of that on today's action. Again, it's first trading day of the fourth quarter. Bitcoin having a nice rise over the last week or so. We can see we found support just above 108,000. It was essentially a retest of the lows from the end of August. We sort of made a double bottom pattern now. We're testing the upper end of that range. It's right around 117, 118,000. Today, really coming out of the weekend, coming out of Monday and Tuesday, accelerating to the upside. I'd love to see a push above 118 and some follow through. We're very close to that previous resistance from July and August. This chart looks exceptionally strong if and when we can get above that level. Watch the RSI, by the way, that's just pushing above 60 on today's session. That's actually a pretty good sign. We highlighted Meta on Tuesday's show. Just want to revisit the fact that today we did not find support around the August-September low there. That was right around 720 or so. Today we actually gapped down at the open right at 720 and just kind of rolled over from there. Ended up finishing about mid-range for the day, but the damage was already done. So, I consider Meta a broken chart at this point, with the price undercutting a previous low, with the RSI pushing below 40, the relative strength obviously rolling over the last 2 weeks. This is a stock that's showing vulnerability. And as we've mentioned, I think one of the challenges to this market, one of the big question marks would be if names like Meta are breaking down. I just don't know if there's enough other stocks that could emerge and look strong enough and have a big enough weight in the benchmark that they could counteract negative moves in Meta. Now, the reason why the S&P and the NASDAQ are not tanking with Meta down over 2% is because a lot of other things were actually just fine. So more and more Magnificent Seven kind of leading growth names struggling could be kind of a nail in the coffin to this bull market phase, which is why I would also be watching names like Amazon and names like Netflix. Here's the chart of Netflix. We can see support around 1145. That was the low from August. That also represents a 38.2% retracement from the April low to the June high. Look how that early August low kind of tests that level almost ideally. We then rally up to around 1200, 1250. We roll over, and now we're back to testing that level. There's the line in the sand. So while Meta has broken it, Netflix now testing it. Again, more and more of these names fail to hold support. That's what an unhealthy market looks like, right? Stocks pull back and fail to hold key support. I'd keep an eye on Netflix here. So what's working if names like Netflix is pulling back and names like Meta are struggling? It's healthcare, at least today, right? Top performing sector by far. The XLV up over 3%, far leaving everything else in the dust here. What's encouraging about the XLV is yesterday on Tuesday's session, we closed above the 200-day moving average. Last couple times we've tried that, we've actually failed to, gain any foothold above that, what we call a long-term trend barometer. Today, we're actually getting a really nice follow-through, up another 3%, pushing to the upside, up above 140. Now I think we have to look back to the highs from Q1. That's in the 146 to 148 range. That's almost where we finished the day here. So we get above there. I think we're looking back at the summer 2024 highs. That's up in the 150s. What a nice recovery after being such a sideways chart and an underperformer for most of this year, really starting to push higher. And if that would happen, I would expect the relative strength to really start to improve. Let's look at a couple of names that are in that healthcare sector. They're doing well. The chart of Pfizer looks very similar to the XLV, pushing above 26 today. That's after Tuesday with the nice rally, nice follow-through day. Overbought. which means up a lot. That means the stock is working quite a bit. If charts like that feel overextended, if some names you're looking at that have been going up for so long feel like it's too late, I don't blame you. Look at things like Biogen that are just starting to emerge above the 200-day moving average, right? Classic rotation from what I'd call a distribution phase to more of an accumulation phase. We have higher highs, higher lows. We broke above the 200-day moving average. We pulled back and test that over the last week, and today just resolving that to the upside, making a new 3-month high. So I love the fact when you have a classic technical setup, you break above an expected resistance level, you pull back, resistance becomes support. Look at how the moving average is all clustering here around 135. That's the 50 and 200-day, both serving as support. We have a nice upside rotation. I think that's a strong chart, getting stronger until proven otherwise. Folks, that'll do it for today. Thank you so much for watching. And again, thanks for some flexibility this week as I travel to Michigan, visit my daughter in boarding school, take the family with me, grabbing some time in the hotel to share some charts and observations with you. Please put questions with this video on our YouTube channel. We will be monitoring questions for our mailbag episode later this week. We'd love to answer one of your questions on the show. For Market Misbehavior, I'm Dave Keller. Have a great night. And remember, it's always a good time to own good charts. Have a good night, folks.